welcome to Tarun IAS. Today we will be taking editorial analysis from the Hindu and the Indian Express of 27th of October 2022. The topic of the day is investment. You can relate this article with General Studies paper 3, that is mobilization of resources, and I have taken this article from the Hindu. Text and context. The finance minister's call for industrial investment. Now basically the finance minister recently has urged the private sector investors to invest in the economy. Now why is it so? Alright. After the 2 years of pandemic, according to the economic survey, India experienced the V-shaped recovery. However, this is not the case. The private investment is low. The consumption demand is low as compared to the pre-pandemic level. We still have a long time. We still have time to achieve more consumption and more demand as compared to the pre-pandemic level. All right. In certain sectors which are sensitive to the gathering of the humans, which are touch sensitive basically, K-shaped recovery was observed. We did see the inequality report which talked about that the level of inequality has risen post-pandemic. So therefore we cannot completely say that India had a V-shaped recovery. We did see that certain sectors had seen K-shaped recovery. K-shaped recovery. What does this K-shaped recovery mean? That the sectors of the economy are not growing equally. Certain sectors are growing fast and certain sectors are not growing so fast, or perhaps they are even declining. For example, the hospitality and the tourism sectors, the manufacturing sectors. The manufacturing sector post-pandemic has not achieved the level of growth as it had seen in the pre-pandemic level. Alright, so basically the government is urging the private sector to invest into the economy due to several reasons. The first reason is the government of India had already cut the corporate tax in the year 2019 from 30% to 22%. Alright, there has been observing the Indian economy has been facing the K-shaped recovery. Government of India has a limited ability to invest, considering the government of India's expenditure in the various social sectors, in social infrastructure such as health, public institution, education, etc., social security, pension, interest on loans taken, etc. So government's ability to invest is less. And if we consider the economic survey of 2017, and which talked about the unseen role of the private sector in deriving the economy, they are the unseen drivers. Private consumption and private investment are the drivers of economy. So that is the reason why the finance minister had to basically urge, because if we consider the level of the investment and the savings in the economy, it is very less as compared to the pre-pandemic level. This is the graph, as you can see. According to the purchasing managers index for manufacturing, look at the rate of expansion. So from April, May, June, if we look at this, so there has not been a very significant expansion. And if we look at the index of industrial production, from April there was a rise in the industrial production in the month of May, and then started to decline. This fiscal year, that means the year 2022. Alright, now let's move on. So we will see what is the current scenario now. You can use this article basically in your general studies paper 3 to understand the economic recovery and the mobilization of the resources, that private investment is needed and how the private investment is growing and what are the impediments before the private sector. Gross fixed capital formation, and if we consider this constant price, that is the base year 2011 and 12, it rose to 9.6%. That means there was a slight increase from 11.66 lakh to 12.77 lakh. Manufacturing gross value addition also rose to 6.5% in the first quarter of the financial year 2022, that is the first pandemic year. The private consumption is significant driver of the economy, and it was 2.4% less than the preceding quarter. All right. The gross fixed capital formation shrank quarter on quarter by 6.8 percentage. So that means, if I am to conclude from this data, the first point is that there is a low consumption, there is low demand, there is low growth in the manufacturing sector. All right. And the capital formation is low. By capital formation means the investment by the government in establishing the capital assets, the long term assets. And the fourth point is the low growth in the gross fixed capital formation. Now what happened? The industrial production, did show the growth in each of the first 5 months of this fiscal year, starting from the April, if we compare it with the year earlier. But however, the monthly numbers, as it was seen in the IIP and the PMI, which is the Purchasing Managers Index, the manufacturing have progressed in fits and start. That means there is a slow progress, like अभी progress किया then नहीं किया, अभी progress, इस तरीके से. This is how, and if I am to talk about the gist of this article, now basically one article was published in the Hindu by the Pulapre Balakrishna, who argued that the capital expenditure by the government is basically a precursor to private investment. However, if the government spends, it basically gives security to the private sector investment to invest in the economy. However, the private investment, but it would take a sustained trend in public spending to generate or kindle that enthusiasm in the private sector here. So private sectors are going to private companies investment when they are able to estimate the profit, that if we invest we will be able to generate the profit out of it, then only the private investment are going to, and the private companies are going to invest in it. So in order to have the enthusiasm and the trust of the private investor, the government need to spend. However, the government has also set its priorities. For example, if we take the national monetization pipeline, the national infrastructure pipeline, and the Gati Shakti scheme, the government's intent to invest into the infrastructure formation is very clear. However, the writer says the priority of the government should be in the infrastructure which are productivity enhancing, and also there is a need to curb the food inflation. The government need to step into the agriculture sector to curb the food inflation. All right. Now what is happening to the demand right now? The first thing, the Center for Monitoring Indian Economy, the Consumer Sentiment Index. Now what is this Consumer Sentiment Index? Now basically, India's economy is a consumptive economy, right? We consume a lot. Durable goods, non-durable goods, the food, other items, whether it is domestic tourism, etc. We are consumers. The consumer sentiment basically is a marker for the growth in the economy. If consumer feels that the investment into the economy is not going to be beneficial, then the consumer is not going to spend. So consumer sentiment is important in order to trace the growth of the economy. So consumer sentiment index, according to the Center for Monitoring Indian Economy, is still below the pre-pandemic level. That means we still have to raise our consumptive demands so as to at least be on par with the pre-pandemic level. However, according to the RBI, the quarter second data indicates that the aggregate demand remained buoyant. That means the seasonal adjusted capacity utilization rose to which is highest. Okay. Now, what does this mean? Now, RBI says that the aggregate demand is buoyant. Buoyant basically means that it is rising. It is basically rising. Like there is a dip observed, but however it rises. Okay. Now, at last, the writer says the key to have a progressive investment cycle, it basically lies in the household intention of the savings. The more savings we have, the more investment or the future investment we are going to have. So that's it for today. Have a nice day. Thank you so much for watching Tarun IS.